Hello, hi everyone. Right, welcome back for another weekends of Stock Lighthouse Weekend Stock Talk. Alright, so what's the update for this week? It's going to be very exciting because we had something major that happened this week. Alright, it's all about Donald Trump. Alright, he do his tweet all over again, and there's an impact between the US and China trade war, and it's pretty exciting because things happen in just a short week. So actually, what's happening and how actually things has been going on. Right, I'll just explain a bit more in depth in this weekly video. Alright, so before we get started, just a quick one. Right, remember, if you have not subscribed to this channel, please click on the subscribe button to subscribe on the channel, as well as don't forget to click on the bell beside it. Right, you must click the bell so that you will be notified when the next video is up. Alright, okay, so the quick one, disclaimer. Alright, pause this video if this is your first time to see this video. Pause it and read it through. So just to know that whatever actually recommendation here is just for educational purposes, right? Okay, so let's dive in. Alright, so before we get into what's happening this week, just do a quick recap on what we did discuss last week and how things was going. Alright, so last week video I did share about these three companies: Google, ANET, and FFIV. Alright, or in full name F5 Network. Alright, so for Google, actually, I did enter a trade for this position on a demo account. Alright, okay, actually I just reset my demo account, alright, just to keep track of some of the strategy that I'm going through weekly on the video, so that we have a progress system to actually look at it, how all these trade has been performing, right, so that I can show you the tangible numbers beside it at the end of the day, right, how this portfolio is doing, how this portfolio is growing. We're just starting with a 10,000 portfolio at the start. Why? Because I believe most of you guys are started at this stage now. So along the way, we will learn and we will progress together. Alright, okay, so what's happening for Google? Okay, so this is what I see in Google. Still remember last week, I did mention that Google actually have a drop because of the earnings date. Right, you have a good earnings announcement, good revenue, good profit, hitting most of the record. Right, the only thing is the future estimates wasn't as expected. That's why there's a drop in the market. So the price plunged down. In fact, the next few days, the price tried to achieve to bounce back up. Unfortunately, right at the same day where I actually completed last week video, a few hours later, actually President Donald Trump made a tweet that he's going to implement the trade war all over again because China is not fulfilling their part on the negotiation and things are going backwards. That's why he thinks that he needs to do something about it. That's when the market get volatile. But you can see that the price just supported pretty much around this level, right? So I have actually entered positions on the demo account on Monday itself when the market opens, right? So the trade is in. So what's happened on the trade that I did is actually I did actually sold the bull push spread, right? The reason why I did this because firstly considering the fact that the portfolio is not very big, so I just want to do a simple short trade to minimize my risk, right? At the same time, it's because the market in the US market is at all-time high, so I do not want to actually risk a big part of my portfolio just in case things really went south again from that point onward, right? So it's always better to manage a portfolio, but I don't want to miss this trade, so that's why I initiate a very small position. Alright, so basically what I did, actually I did a bull push spread at a strike price between 115 and 110, which is going to expire next month. Okay, so I collected a premium of $160 just for one contract itself, right? And the trade risk for me, if this contract really went south, the maximum loss I have is on this trade is $340, right? So that will actually give me a potential ROI of about 47%, right? As for ANET and FFIV, I did nothing because I don't think the setup is good. So basically, that's what I did. If you look at the support level now, the price actually closed back up on the day where about 1164, which is above my strike price, so I'm comfortable. It did went beyond it for the day, but it bounced back up again. So it still holds at that level. Anyway, I still got some time. Hopefully, it went up again. So get to the key point of the week itself. What happened is, right after Sunday, after I actually post the video, just hours later, actually Mr. President Donald Trump actually tweeted on his Twitter account, right, to say that China is not China is not doing their part. They are falling back from the negotiation, and that's where he jumped in and said that he need to increase the China tariff from 10 to 25%. and he give a very short notice that he's going to do it by the end of the week, which is Friday 12 a.m. In Eastern Standard Time. Alright, so immediately the China delegate actually flew in all the way to US and continued the negotiation and stuff like that. Unfortunately, things didn't went well. No deals came before the deadline. So right on Friday, alright, 10th of May at 12 midnight, alright, the tariff actually went through. So actually the US will be taxing the China with 200 billions of tax to come. Alright, so that's a huge amount of tax going to be. Okay, so the interesting thing is that when right before the trade, right when the trade talk was all talking about, there's a lot of fear. You can see the market start coming down. When the deadline has passed and there is no new trade agreement that's done, alright, the market is going to crash because the US is going to have a heavy tax, a heavy tariff on the China market, and that's what we anticipated. Right, and the interesting thing is, so when it happens, actually the market didn't do much on the day itself. Right, so you can see that the market is actually irrational sometimes, and when we anticipated some things and the things turns out to be that way, the result or the market movement may not be as such. Right, so that is one interesting thing. Right, but that doesn't mean that things will follow through, because it only happened on Friday. Although you have one full day for everyone to absorb the news and things like that. But tariff is not something that can implement and happen and collect the 200 billion overnight, you see. So it will take a while for the market to actually absorb and things to fall out in place to see what is the real impact of this tariff is going to be in the long run. So it will take a while for the market to actually react, the economy to actually react to this kind of real situation on the ground news, what's going to happen. Alright, okay, but this is what we see. And the key thing is, if you actually plot in the SMA, a simple moving average 50-day period, okay, you can see that the price actually on Friday have a strong sell-off where it's a start, and after that at the end of the day it bounced back up and closed higher, which actually using the 50-day moving average as a good support level. Alright, so this could be a sign that the price might bounce, or it maybe just do a short bounce and come back down. We never know, but as of now, it seems like it's still holding the SMA 200 as a support level. Right, if not, then we actually if it doesn't hold up for long and it come down, the next level we want to look at will be the SMA 200, 200 moving average as the next strong support level to see whether price will actually bounce off on this itself. Okay, right. So looking at that itself, where is the market heading? Where are we looking to? What can we look at? Of course, there are a few stocks that I'm looking at because price came down a bit. But at this point of time, I won't really recommend any stock per se, except for some other stocks like Google. If you have not entered, that is one of them I'm still keeping on my watch list, because I think that Google is still a very strong company. No doubt the tariff is going to implement, but I still think that people still use Google. Companies still have to advertise. People are still posting video on YouTube. Advertisers are still using it of influencer, alright, to make money by advertising and promoting their services through YouTube to the influencers out to the market to get consumers to actually purchase. So advertisement fee is still going to pay. I believe Google still is going to make a lot of money. So if you're talking about stock itself, Google definitely something that I have entered on the demo. But beside Google, what else I'm going to look for? Right? Okay, definitely I'm going to look into China itself. Alright, so why do I look into China when China has a trade war? Alright, still remember this quote by Warren Buffett: be fearful when others are greedy and be greedy when others are fearful. Alright, so the tariff is going to implement, alright, or rather it has implemented, and we have seen that actually the market has a rebound. But whether the market will continue to trend or reverse its trend, as of now we will not know, but we know that it's actually supporting on this 50-day moving average. So what are some of the actually China's stocks or companies you actually can look at? But as a whole, because it's still quite volatile, because this is going to be the two main strong economy doing a head-on. Anything can happen to the market movement, anything can particularly happen to the stocks itself. But in the long run, if you hold your portfolio long term for long run enough, it could actually sustain that impact. But because of that, I will actually rather look at an ETF rather than look at the stock itself, because ETF is actually diversified over a pool or rather a basket of companies. I know that China is going to be affected, but I don't think China will be dead, all right, within the next week, month, or even years, all right. So by holding a ETF, or rather a basket of China stock, I believe that will actually help me to diversify my risk, because not every company will go down. They might be affected in the short term, but most likely they're going to go back up again in the long run. Alright, so if you're looking at ETF, these are the two ETF I'm particularly looking at. Alright, the first one will be ASHR. Okay, if you look at ASHR, it's basically an ETF that's holding the largest 300 liquid companies in China, or rather they call it the A shares in China. Alright, okay, so the things to take note for this ETF is they only invest in A share China stock that are listed in either Shanghai or Shenzhen exchange. They do not do anywhere else outside these two exchanges. Alright, so if you scroll down, you can just go to this website etf.com to find out more about this ETF. Alright, so the key thing I look at it is the distribution of the ETF. So basically they only invest in companies that are in business in China and Hong Kong, but they are mainly listed in Shanghai and Shenzhen exchange. Okay, this in terms of factor, these are the distribution, highly weighted on financial sector, definitely. Alright, so some of the companies you look at, so these are the main holdings. If you are very well versed in China companies, you actually can look at this ETF itself. Alright, there's not the other one that you can look at it, which is the other one that I like is the FXI, basically the iShare China large cap ETF. Right, so they only invest in large cap, the top 50 large cap China company. They are actually traded on the Hong Kong Stock Exchange. Alright, likewise you can just scroll down on this website etf.com. Okay, then you can look at the distribution, highly weighted on Hong Kong stocks, or rather China stocks or Hong Kong stocks listed in the Hong Kong Stock Exchange. Still the same thing, highly weighted on the financial sector. Alright, okay, but they're also quite well versed into the technology sectors as well, or the telecommunication sector. Alright, what I like about them, because if you look at the top 10 holdings, there are more companies that I know of, like the Tencent holding. Alright, one very big company in China. Alright, same thing like the Ping An Insurance is one I know. Bank of China is in it as well. China Life Insurance, this is usually anything to do with insurance. Usually, if they are the big players, nothing much could go wrong. Right, so FXI is also one of the good ETFs that you may consider. Alright, so why do you actually want to look at it? So let me look at ASHR. Right at the start of 2018, alright, it has reached an all-time high, or roughly about $35. Right, all-time high about $35. So last year when the trade war first started, it came all the way down. China was affected all the way until the end of the year. Then Donald Trump just tweeted that the U.S. market is going to do well and the trade war is going to have a solution at the top, a fair negotiation between the two countries, and things start to go back up again. That's where China have a bull run. Alright, so this drop down is roughly about 30 close to 40%. Yeah, bounced back up. Just this week alone, it came back down to here. That's where it's still roughly at range from the peak. It has dropped up to here, roughly about another, still down by about 20%. Alright, so if you remember, as an average as a guide, if anything that actually dropped about 20% is just a small bear correction. So I think this could be a good correction to look at, to enter. Of course, do not put in all your portfolio on this, because we are right at the start of a new move on the trade war. Right, we still do not know exactly how it will turn out in the months to come. Right, so but it does give some advantage on discount. So if you would like to actually add position in your portfolio, I think by looking at this ETF, it's good to add a very small position into your ETF. So maybe just about 1, 2, or maybe even 3% of your portfolio. Right, but if your per trade is roughly around there, about 5%, maybe you just want to divide maybe into 3 or 4 portion of it and just enter bit by bit and see how it reacts. Probably it go down a bit further in the next 1 or 2 months, because still continuation of the trade war discussion. When it drop further, you might actually use the next portion of your position to actually enter again, to actually accumulate at an average price. Alright, so do not go all in for now. Just add a position if you feel comfortable, or if not, you want to see how it turn out. Alright, so how about FXI? FXI is the same thing. It have came down previously on downtrend for the last year, then it bounced, broke this resistance level and went back up. Now came back down again. But I feel that this could be a good point. The same thing, just to add very small position so that you don't miss out if the price bounce back up on this gain itself. Alright, so this could be a good entry for a bit of small position. If you would like to actually buy share, you definitely can do that. You can actually buy a share itself. If not, the next thing you can do is actually buy a call option. Alright, in these two particular cases, I would say that invest for the long term. Alright, because we know that as an ETF economy, it will generally rise over time. Okay, so you might actually look at the long call. As of now, you can actually look at the Jan 15, 2021 long call itself. So for ASHR, you can actually currently look at the strike price roughly about 22, and you'll be paying a premium about $6. So for FXI, same thing, you do long call, same expiry 15 Jan 2021, right, which is roughly about 2 years, close to 2 years from now, right, at the strike price of 36 and premium at $8, right. So you actually do a call itself. So it depends on your portfolio. If your portfolio is not very big and you want to enter and you can't do a call, alright, you might actually just want to get a few shares just to get your portfolio in with some position to actually to gain to potentially stand to make a gain in the long run. Another reason why you actually want to consider doing a long call instead of buying a share. So assuming if you are able to buy 100 shares and above, just think about it. Alright, if you're going to buy a share at, let's say ASHR currently at share price 27, you have to pay about 2,007 for 100 shares. Why not consider buying a long call where you actually buy one contract, which is also equivalent to 100 shares at $6 premium. Technically, you're only paying $600 instead of 2,007. Alright, of course, there's limitation to buying a long call. The main key thing is because you have a time factor, you have the time delay factor that is against you because you are paying for the premium. And the second thing is because there's deadline, there's an expiry date. While you buy a share, it doesn't have an expiry date. So when you buy a share, you can hold as long as forever as you want. But if you buy a call option, the expiry date is set at 15 Jan 2021. So if the price doesn't go above this strike price, right, at the end of the day, when it expired, you are actually on a disadvantage of buying call. Alright, so you have an advantage in the sense that you're paying less premium now. You are generally able to get similar potential gain. But on the downside is if you are lost, your price will move, you are just going to lose this 600. So you actually reduce your risk, but tight within the time factor, but actually give you a quite advantage in terms of the potential gain. Right. Similarly for FXI, you can look at it for 100 shares now at share price roughly about close to 42. Alright, you're paying 4,002 for 100 shares, but if you do a long call, you're paying a premium $8. That will work out roughly about $800 for the same $100 share that you are actually control. So you reduce your risk, but you try to maximize your return, right, on a similar potential upside, right, on a long-term basis, 1.5 to about 2 years long, right. So if you are actually looking into adding a portfolio in terms of this China-US trade war move, alright, so could be an ETF for you to enter a short position first. Alright, but like I said, long term wise, please just keep a lookout for this. What's going to happen in the market, right, in the next 1 to 2 weeks, because things just happened on Friday, one whole day to absorb. There's a fair buyer and seller different mood or sentiment because Trump also tweeted that having this tariff is actually very good for US itself. It's good for the farmers because they have extra tax money to actually do some form of purchasing to actually support the farmers, which was initially a very big concern for the farmers in the US market. So we don't know how it turns out. All these are just news and speculation. It's just different ways of putting words what's going to happen in the market. Alright, so but price action doesn't lie. Okay, how the investors in the market actually, how the investor sentiment in the market actually will all be reflected on the market as time to come. So for the week or two, okay, do keep a lookout how this is going to react. Then we will see how actually price will move on, whether will it bounce off this 50-day average and go back up again and break through, or actually it will come down. Alright, so the key concern now is because we just hit this top and this top right at the resistance. Alright, it seems like it's been hitting a double top. Right, if you are technical investor, you will well know that a double top typically usually means a downward move. Alright, so it did came down, but whether it will continue, let's see how it goes, because it need to break through the two support level at that 50-day moving average and the 200 days moving average. So we'll see how it turns out in the next 1 or 2 weeks. Right, so just keep a lookout. Right, trade safe. Alright, if you feel uncomfortable, uneasy about any trade or any other position that you are holding that are already in profit, you might actually want to consider the liquidate part of it or all of it to lock in your profit and see how the market move in the next 1 to 2 weeks or even a month, and before you decide on your next move. Alright, so that's it for this quick weekly update. Alright, the market is very volatile, very uncertain because of the new add-on of the news market movement of the trade war. We're going to see how it goes. Alright, so hopefully it goes up a bit, we lock in some small profit, and then it comes all the way down so that we can enter more position in the market and ride on the next 10 years bull run all over again. Alright, so that's just a wishful thinking. Alright, we never know until things happen. Okay, so with that, alright, trade safely, be safe on your investment. Alright, and as you know, I wish you a good day, good week. Alright, and I will see you on the next video. Bye.